Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. You guys know what to do. All right, let's get right to it. Listen, it's the Fed's job right now to make you jobless. It's the Fed job right now to cause jobs, to cause unemployment. The Fed wants you unemployed. The reason why I titled this "The Fed Wants You Unemployed" is that's his job right now. For those of you that are new to the market and really don't understand how this makes any sense. So, a good jobs report, all right, we already had payroll, right? But now we have the job reports that are coming out this morning, all right? Friday, I believe it's Friday morning, 8:30 a.m. Eastern Standard Time. So that's 7:30. So just keep your eyes and ears focused for that. Now, if the job numbers come out good, right? Meaning unemployment remained low or unemployment got even lower, then that will be negative for the stock market, right? That will be negative for the stock market. And that's because the Fed will take that as a signal that he could be more hawkish or more aggressive with the interest rate hikes. Follow? And so it gives him more runway. You hear these talking heads saying it's giving the Fed more runway. You hear the term hawkish. Hawkish just means more aggressive, like a hawk is aggressive. And you hear the term dovish, meaning, real gentle, like a dove, right? So the Fed is more hawkish because he sees that the market could handle these interest rate hikes. And the reason why he does the interest rate hikes is because inflation was ridiculously high. But the Fed was too late. Now he's too aggressive, and he's being too aggressive for too long, right? So now the rubber band is pulled tight, right? So a lot of people think, including myself, think he will be neutral. I believe he's going to have two more interest rate hikes. We shall see what they shall be. And I believe that he'll be neutral, mostly neutral in 2023. There may be one or two, right? And then depending on how bad the market goes, then he reverses his policy and literally does a pivot and a 360. I'm sorry, is that right? 180. Well, he does a full turnaround and he starts to decrease the interest rate hikes. Okay. Now, here's the difference. A good job reports in this environment in a bear market, while the Fed is trying to bring inflation down, is a bad thing. But when things turn around and we're in a recession and he's trying to bring us out of a recession and we have a lot of unemployment, then good jobs report actually becomes a good thing and the market starts to go up. So I want you to get a full understanding for those of you that don't understand why a good job report will be negative for the market. So I just wanted to make it crystal clear and plain so you'll fully understand how all of these moving parts affects your wallet if you are affects your trading. And so the market will react. Now, remember, it is Friday and it's risk off for a lot of people, right? And so people could sell off. Now, I don't have a crystal ball. I can't tell you what's going to happen. The market has just been going against what it normally does. So it could be a bad jobs report. The market could go red in the beginning of the day and actually turn green by the end of the day. But we shall see. Or it could just be a continual sell-off because it's Friday. People are risk off and they don't want to hold over the weekend. So just be prepared. We knew in advance that this was going to be an extremely volatile week. So that's what I want you guys to know and hear. It's important that you get the full story and fully understand. Now, if the market oversells on Friday, then you could have a green day Monday. If it oversells, if the rubber band stretches too far, it'll snap the other direction. Okay, so let's just monitor this and see exactly what's going on. I'm gonna leave it right there, good people. Make sure you check out the links below. Listen, I will be traveling, and I asked you guys. I'm gonna leave another one for those of you that actually are just really scared about this market. Just know that all of this bad news is leading to good news. Okay, one of the things you want to control more than anything is your emotions during volatile times like this. I've been through plenty of recessions, and I just kind of know where it goes. Just look back. When in doubt, zoom out. So on today's video, if you haven't seen it, I'm going to leave a video in this box just as a little encouragement, because your emotions will cause you to lose money or gain money. And we just want you to just be calm, cool, collective, have a plan. I have plans, but even in your plans, be ready to pivot as the Fed pivots. Okay, I'm going to leave it right there, good people. Make sure you check out those links below. I love you guys. Have a blessed, safe, wonderful weekend. Live, love, laugh, and learn. Make sure you watch that video.